Hi, Jared. How are you?
I'm good, Lori. Good to see you.
Thanks for being on the show. So I'm Chart Guy Lori. I'm part of the Chart Guys community, and I reached out to Jared the minute I finished his book. I finished it on Audible, and then I had to go buy the book so I could do the worksheet. So thank you for being here. The book is The Mental Game of Trading, and I asked Jared to join me. I had some questions about it, and if you could just tell people a little bit about your background.
So I started coaching 18 years ago. I started working with golfers. I was an aspiring professional golfer myself, kind of derailed by my own mental hangups and kind of went off to find my own answers and kind of the classic entrepreneurial, what was out there, didn't work for me. And so I kind of had to find my own answers. Got licensed as a traditional therapist, master's degree, 2 years getting, the credentialing. But then once I did that, I quit my job and started coaching golfers, trying to kind of create a more robust program to what I had found was available at the time in golf psychology. And that's not to say that that material was bad. It just didn't kind of hit on all the pieces of what I needed to get over, my issues, which really had to do with kind of choking under pressure and big time national events. Right. I was a 3-time All-American in Division III,
Wow.
won 9 tournaments, but trying to qualify for the U.S. Open, the USAM, these big events, was anxiety producing, in its own right. And so I just couldn't get over it. I was choking. So once I started coaching, we really kind of began honing my program with, junior golfers, good amateurs, some professionals. And then I met a poker player who used to play professional golf, and he understood intuitively the value of what I was doing. And poker was an interesting opportunity because there was no, in golf, Bob Rotella was the big name. There was no Bob Rotella in poker. And so I kind of had an opportunity to become that. And not only that, but really, work in an industry where, the breadth of people that were interested in what I offered was a lot greater than in golf. Golf was tough because people could buy clubs, they could just go beat balls in the driving range for hours. And there's all sorts of things to convince themselves that, they can kind of work through their,
Right.
issues. But in poker, you don't really have that luxury, and the client that I was working with was experiencing some kind of big tilt problems, breaking computers, literally had a pile of, keyboards and mice in the corner of his office when I saw him the first time.
Wow.
And so, wrote Mental Game of Poker 2011, Mental Game of Poker 2, 2013. And it was around the time the second book came out that traders started picking up the poker book saying, hey, you just changed the word poker to trading, it all applies, right? And we
Right.
all know the parallels between those two industries. And so, yeah, I started working with some traders and building up a roster, started doing some institutional work where kind of going on site, working with some institutional firms. I'd fly out there for 2-3 days, work with 20 to 30 traders in that time frame, kind of very intensive work, and then kind of do that on a monthly basis. And yeah, 2008, 2009, I started working on the mental game of trading. I'm not one to just literally just kind of scratch out the word poker, and really wanted to kind of dive into understanding in more detail, what traders experience that is actually very different from poker. But I also gave me an opportunity to kind of upgrade my material. 10 years is a long time.
Right.
And so when mental game of trading did finally come out, I do feel like my system was a lot more systematized and was able to provide traders, I think a kind of a nice parallel, right? We all know the value and importance of having a strategy or a system as a
Right.
trader. And to me, I think you need to have a mental game strategy. And, my system in the book, it really kind of provides that.
Absolutely. You talk about poker and trading. That's how I found your book is Annie Duke's Thinking in Bets.
Aha.
So I read her book and it got me down the poker road. I've never really played poker, so I don't know a lot about it, but I feel like I know a lot now as far as the mental game because it's so much like trading. So what's the holy grail? I'm kidding. What's the holy grail of overcoming the mental game of trading? Like, we're always looking for the holy grail indicator. What would you say is the biggest common denominator that you see that people need to tackle?
That they think there's a holy grail. uh,
Exactly.
yeah, I mean, if I had it, if anybody had it, it should cost a lot more. And so the reality is that trading and being a trader, I think, should be kind of looked at really like a profession, a career, a performance art, like an athlete. And, just because you have capital, doesn't mean that you have the capability to play in the NFL, to play on the PGA Tour, right? I mean, there's so many barriers to entry to get into those industries and to play at the highest level. But in trading, you don't need, there's none of them, right? You literally just need to have cash and you can start and call yourself a trader. And I think it really takes years to get to the point where you can actually call yourself a trader. Now, you could be somebody who trades, but that's a very different thing than actually having the skills and the competencies. So I do think that, in my experience, by and large, traders, certainly new ones, vastly underestimate the amount of time and effort it takes to become very skilled. And when people ask me if I trade, that's kind of one of the answers that I provide. It's like, I can't be a great coach and be a great trader at this point in my life. A, because I don't love trading the way you all do. I love golf. Like I still am playing golf at a very high level. You know, I love coaching, right? But to be great at anything, which is, you know, the ethos that I take to whatever I do, requires a ton of time. And I can't segment that in my life. So I think, you know, the time and effort it takes to become very skilled is one. Two, I would say that by and large, people have a kind of a false view of their emotions, right? They think of FOMO and greed and anger and, you know, overconfidence as being the problem. And they are merely just signals of the deeper problem, which doesn't have to get too personal. Now, while I may be a therapist by training, I'm not a therapist by, you know, by practice, right? I feel like what I've kind of done is find like this performance layer of flaws and biases and illusions and wishes and expectations that really create a lot of the emotional volatility that creates the trading errors that you all struggle with. So by kind of changing your perspective on your emotions, they're not something to get rid of, right? They're actually a valuable asset when used properly. Because motivation is an emotion, right? If you don't have intense motivation and interest and love and passion, you're going to suck for that simple reason. Absolutely. So you need emotion to fuel you. What we want is the right emotions, the right kind of mixture of emotions. When those things are changing, having a process and a strategy to better manage and contain and corral and correct and mediate, that's what you want. To me, that's the Holy Grail. The Holy Grail is not, hey, I've solved things like it's game over. The Holy Grail is having a better system and a structure to better understand how to make the most out of your emotions and utilize them in a more effective way.
I don't know if there's a definitive answer for this, but are there certain people that shouldn't be traders due to some of their personality traits, like, you know, gambling or, you know, excessive gambling or compulsive disorder? My mentor says that not everyone can be a painter. You know, some people aren't cut out to paint. I'm not a painter. I can't do that attention to detail. Have you found traits with people like, hey, you shouldn't be trading?
Most of the people that show up on my door don't kind of have that particular problem. I mean, I'm not a big guy who would suggest, I'm not big into suggesting in like kind of very blunt black and white terms who should and should not do things. I think if people want to and they're driven to and they want to aspire to it, I'm all for kind of figuring out, even if you have like gambling issues, right? That might mean that you've got to really contain and corral things. You might mean that it's going to take you years of like doing some deeper personal work to get to the roots of those gambling tendencies. And you might have to create, you know, structures within trading to make sure that you're protected. But I mean, from a tendency standpoint, I think the biggest character deficit that's going to preclude you here is, you know, being too closed-minded. You know, overconfidence and too much hubris is a big issue, not just for doing mental game work, but even just within trading. I mean, you may have figured it out and you're printing money. You can make millions over the course of a couple of years. That's not really that impressive to me, right? What's impressive is those that can figure out how to continue to learn and thrive and be successful and grow and be dominant, right? I'm very interested in the Nick Sabans of the world, the Gino Ariamas of the world, you know, the Greg Popovich's of the world, who are great coaches of people who and teams who are successful and dominant for long periods of time, right? That interests me a lot more. And, you know, we've seen many traders come and go, right? It's the ones that really are able to survive and thrive and dominate for long periods of time are the ones that we want to emulate. So you make a couple $1 million in 1 year, 2 years. It doesn't mean a whole lot because you could lose that much or more in the next year without really blinking an eye, and mostly because I would view it as being too closed-minded and being, a little bit too kind of full of yourself.
The hubris and ego is so funny you bring that up. I come from a healthcare background. I was in healthcare for 20 years and I managed physicians. I specialize in physician governance and physician HR. The biggest egos. Sorry if you're a physician watching. I know you're wonderful and you don't have an ego, but I know that physicians have, big egos. And I thought I was in this ego dominated industry till I got into trading. A lot more egos in trading, a ton more. So absolutely, we see that a lot with people who are struggling with trading, with the greed, the ego, the fear, all the different points in your book. Another point that I've brought up to other traders, and I don't know if it's accurate, and I want you to call me out if it's not. If you have evidence of discipline in your life in any component, maybe it's parenting, maybe it's health, that discipline can be brought over to trading. Is that true?
It can, but there's not like an equal sign, right? So I think there is a cross-training effect to kind of any area outside of trading that you can utilize, right? So if you have a very kind of strong confidence outside of trading and your confidence is weak within trading, that would suggest that it's probably more skill-based and there's probably maybe some more expectations that are happening that are kind of weakening your confidence. It's not really personal. Whereas sometimes if you actually, have some deeper weaknesses on a personal level, you can have a lot of confidence within trading, but there might be times where you go through an extended drawdown, the market changes, you're really kind of confused, where the degree to which your confidence can drop, is going to be a lot greater for somebody than somebody else. But, you bring up discipline. Yeah. I mean, by all means, if you're well disciplined elsewhere, does that guarantee that you're going to be disciplined in trading? Of course not. Does it mean that, you're not going to have to develop? Because a lot of times there's kind of a contextual skill that needs to happen where you're fusing discipline with the specifics of the trading environment. Sometimes when traders will move from they might be trading on shorter time frames and then they move to a longer time frame, or from moving to swing trading to day trading. And, in that prior kind of version that they didn't have any tilt issues. They didn't have any confidence issues, or they had kind of solved them. And then when they make that transfer to change to a new style of trading or a new time frame, they resurface again, right? Yeah. And part of that is because they had kind of solved it in the context of that prior trading. So you kind of have to look at your skills as being somewhat connected and dependent on the environment with which they are in. But if you have shown yourself to be disciplined in multiple different arenas, let's say, in prior work environments, prior, performance environments, as well as your current life, yes, you are going to learn to be disciplined as a trader a lot faster and easier, and it's going to have more staying power than somebody that does not have that, because they're now having to kind of learn it out of nothing.
That makes sense. Oh, the biggest issue that I see with traders, and I want to talk about the inchworm, that's the most important thing I want to get to before we get to the end, is when they see profit, they take it and they let those losers just run, and they see green and they take it. It's the opposite of what we need to do. I kind of liken it to skiing. I was a terrible skier because I wanted to lean back. That's my natural tendency, is to lean back, but you need to lean forward into the mountain. Like you're in your head's like, oh, heck no, I'm not going down this mountain. And that in trading, you see green, you take it and you let the losers run. What is the core issue typically around that? And I know it's not a one size fits all.
Yeah, I mean, I think we can put it firmly under the umbrella of fear right now. The fear sometimes can be confidence based in terms of, weakness there that's now kind of exaggerating it. But by and large, it's fear. And so it's the fear of loss. It's the fear of making a mistake. It's the fear of missing out. A bird in the hand is worth, it's like, it makes some sense, right? Most of our lives are take advantage of what's right in front of you versus actually kind of holding on and being more, kind of longer term focused. That's harder for people, especially when, there is inherently more intensity around this, and you want it to work, you want to be successful. What I would say is that the thing that traders and really people very oftentimes, I think, dramatically get wrong is in their calculation of risk. So they see that the risk calculus in that moment, and they say, well, the risk is greater to not take that profit. And so I must take it, right? But I think actually the risk is far greater by taking that profit, because what it's doing is it's actually preventing you from having long-term success, right? You're basically almost kind of guaranteeing, in a lot of circumstances, you're guaranteeing that you're going to fail in the long term, because your growth curve is going to be so flat that you're not going to create that exponential curve to do something that is atypical, which is to be a successful long-term profitable trader. I mean, like the bottom line is like, we don't know, nobody knows the percentages. We all kind of guess it's somewhere between 90-95% of traders don't make money long term. But let's even just say hypothetically it's 80%. So 20% of you are going to be successful. That is still far above average. If you are going to do something that is atypical, you have to have the chops to take the risk necessary to give yourself that option. It almost is like buying options, right? If your potential is going to be realized, you can't do that from just taking what's right in front of you, right? You have to risk in order to see that potential be realized. I mean, people kind of miscalculate risk in everyday life, right? Like the difference between flying in an airplane and driving a car, classic example. But I even go even farther of like, okay, let's say you are truly afraid of dying and disease, and just like you can't walk out your front door. And I know that's an extreme example. You could be in bed and die of a blood clot.
You're full of fun information today.
Yeah, and the point is to say, look, if you are alive, you are having to deal with risk, and the choices that we make every single day is effectively a risk calculus. And in my experience, not a single one of my clients has ever said that the pain associated with failing was greater by giving it my all, doing everything I possibly could, and still failing. No, everybody says the pain of not trying is way harder, because now you're left with the what ifs, and that is torturous. If you're going to fail as a trader, I'm not saying fail fast. I know that's a common phrase, but if you're going to fail knowing that you can close the door, knowing that you did everything you could. And maybe a couple of years down the line, you'll have another chance because of what you did. But if you half-ass it and you continue to take money off the table just because it's right in front of you, you're basically kind of condemning yourself, maybe not to a lifetime, but certainly to a lot longer of a pain. Like you're going to experience a lot more pain in the long term.
So I told you I would only take 15 to 20 minutes of your time. I'm smiling the whole time you're talking. I could talk to you for hours, but I would like to end on Inchworm. So if you could just do two things, kind of explain the Inchworm concept, which really blew me away. I've never heard of that explained like that. And then what percentage of time should traders spend analyzing their weaknesses? Like if you have 3 hours a day to devote to trading, should you do an hour and a half of trading, an hour and a half of breaking down your game to A, B, C, and the weaknesses as you outline in your book? Or it doesn't require that much time. So if you could explain Inchworm first.
Yeah, so the concept of inchworm is basically based off of the movement of an actual inchworm. And so for those that don't know how it moves, it kind of does this like kind of little walking movement. It's a caterpillar that doesn't kind of crawl along the ground. It has this little hump in the middle, and it kind of picks up the front end, stretches itself out straight, anchors that end, and then squeezes the back end forward so it can move along. And so to me, the inchworm is effectively a bell curve, and a bell curve as it relates to your own performance. There we go. I can see it here. Bell curve as it relates to your own performance, we can kind of divide it into, your best, your average, and your worst. And a lot of traders, just like a lot of poker players and golfers and, other professionals that I coach, very often run into trouble because their back end, right, their C game is kind of stuck. And so what ends up happening is that gap between their best and their worst gets too wide, right? Their inchworm is kind of flattened. And in order for that inchworm to move forward, it's got to move that back end forward. Otherwise, it's kind of doing this like commando style thing. And a lot of people are doing that. And it's really, really energy intensive. You burn out more often. You go through a lot of emotional highs and lows. Your performances also goes through highs and lows, and you need more time off to recover. It's a chaotic mess when that happens. And so the simple answer is like, how are you going to move that back end forward? And the good thing is that by and large, all of your worst mistakes as a trader, like all of those really awful, terrible times, the things where you're making mistakes that you shouldn't make, but still do, all of that predominantly is a consequence of some mental and emotional flaws. So it's nothing, you cannot improve your C game in that scenario by learning more from a technical standpoint, right? And that's, or fortunately, what a lot of traders end up doing, right?
Yep.
Or they kind of jump around to different systems and they just like looking for something to just get them unstuck. And they might actually, right? There'll be this sort of temporary honeymoon period where all things are great again. And then what's going to happen, they're going to slowly, kind of find their way back down to that bottom end, because again, you cannot escape these mental game problems with some tactical corrections. So how much time do you need to spend, working on your C game? It really kind of depends, right? If you're in the scenario that I just described, then yeah, you need to put time into trading, but you need to put a lot of time into understanding the cause of your C game and devising a strategy to fix it. Now, obviously, the book is the Method of Trading is designed to help you to do that, but there's lots of ways to kind of work your way into kind of solving that C game side of it. But it's not technical; it's all mental. So if you're in a better spot, right, and you've got a strategy in place, now it's just a question of getting a lot of repetition. Then you can scale down the amount of time that you're working on your mental game because the strategy is there. Now it's a question of application.
Right.
There's not a great place to practice trading. I mean, I have the opportunity to go on the golf course, play simulated rounds, practice there and really work to hone my skills. I know traders can, you can back test and you can, paper trade. But at the end of the day, like your best training is going to come in the live market. So if you've got a good strategy in place, you might only need 10 or 15 minutes, 20 minutes to just get yourself prepped, ready to go. And then the rest of your time should be spent trading and really working hard to move that back end of your C game forward. I actually wrote a blog, since you're on my website now. If you go to resources under blog, you'll see that my most recent entry is on a topic called suck less. And
I
it's a
love
topic
that.
from the book. I mean, it's the simple idea is that sucking less to me is the true key to success. Maybe that it actually is the holy grail. That to move your C game forward, it's a byproduct of finding out kind of what your true weakness is, and then when those moments occur where it's far more likely to be in your C game, you cannot allow it to occur under any circumstance, because otherwise you get better at it. Your C game gets stronger. But if you're able to suck less, so if you're able to, let's say, hold that position for 5 more minutes before you exit, that's progress. That's you sucking less. If you're able to stay out of a position that you want to desperately jump into or desperately fire back into after having just gotten stopped out for a very unlucky reason, right? Air quotes. But if you can kind of hold out and minimize the severity of your C game, right, you will make progress. And over time, that C game, that back end of that inchworm will move forward and will create a narrower inchworm and give you the capacity to be trading at a more optimal frequency with a lot greater ease, right? When that inchworm is stretched out wide, it is so hard to be consistent because it takes so much energy day in and day out to do that. And the markets are intense enough as it is, and it just makes it almost impractical to be able to reach that level
I was stuck in that flat zone for 4 years, and it was the most frustrating just time in my life that spilled over into personal, and I just kept adding indicators and adding the tickers that I look at and the systems that I look at, and I just kept getting flatter and flatter. And it's just like the sucking less. I didn't know that term, but working on the fear part was, for me, it was the fear part. And I'm not afraid to admit I got some behavioral therapy, and I think that sometimes it requires that. Like, why am I self-sabotaging? Oh, it's because I'm scared. And why am I scared? So I obviously don't have any expertise in this area. That's why I gravitate toward books like yours. And I really appreciate you being here. And I think you just ended it well with the Holy Grail is just suck less. So thank you for being here. And the name of the book is Mental Game of Trading. And this is Jared Tendler. And thank you for being here.
Thanks, Roy. Great to talk to you.